Carol Massar.
Hi.
Great to see you back here.
Thank you.
But I need you to look at the market and focus for a second here. What's going on?
Can't promise you anything. No, I will focus. I think what's interesting is to see the first gain on the S&P 500 this week, in a week where we've seen a different tone. We're still early in on earnings. We've got a lot coming after the closing bell. I'm thinking about next week when we get some of the big cap tech names and whether or not what that means for market direction.
Okay, speaking of those large cap, the mega cap tech companies, I guess you could say, the Mag 7 hitting a 3-month high. Thank you, Tesla, for those results yesterday, sending Mag 7 higher.
It's amazing.
Up more than 20%. I don't want to give Carol's gainers away, but up more than 20%.
Yeah, it's
not just that, though. Tesla's point contribution to the S&P 500 accounts for all of its gains. So you take Tesla out of the equation, and the S&P 500 would be flat right now.
Yeah.
There's a lot that's been made, Romaine, about how there's $6.5 trillion sitting in money market accounts. Maybe one reason why people aren't putting that money to work is because they see lofty valuations, and they kind of want to wait for a better entry point.
Yeah, it's kind of interesting, though, too. I mean, the move on Tesla, when we talk about the idea of valuations and the idea that you had a stock that was beaten down, and then, of course, you get this surprise report, a surprise for a lot of folks, and, of course, that's what leads to a 20% pop here. So I still feel like if people are looking for value, I mean, you could make an argument about whether Tesla's value or not, but certainly on a relative basis to Tesla's previous valuations, certainly a value stock, at least for today. I think Carol might get to that a little bit later, but we wanted to help her out with the gainers here.
Thank you.
Absolutely. We're nothing if not helpful. The Dow Jones Industrial Average sitting this rally out, going to close down roughly about 140 points, or roughly about 0.3% as BMO and BlackRock are ringing the bell at the Nasdaq and at the NYSE. The S&P 500, though, that is going to close higher, back above 5,800, a 12-point gain, or 0.2%. The Nasdaq Composite up about 0.8%, and the Russell 2000 squeezing in on the action as well, up 0.2%.
Just a little bit of a gain there. Hey, guys, almost an even split here in the S&P 500. 249 names to the upside, 252 to the downside, 2 unchanged, Scarlett.
Yeah, pretty much an even split, too, when you look at the sector performances in the S&P 500. Materials are your worst performers. Newmont, the big drag there, that group down by 1.4%. Utilities and industrials each losing 0.7%. And consumer discretionary, which is really on the back of Tesla, is up 3.25%. Communication services and REITs are each up by about 0.25%.
All right, a lot of green on that map. We've talked about Tesla a lot already. Romaine giving me, I should say, an assist earlier too, in terms of why we saw this one heading higher, finishing just off its highs of the day, up 22%, biggest one-day gain since May of 2013, top in the Nasdaq 100, a top gainer in the S&P 500. We know strong earnings we got from the automaker. Auto profit margins were also strong. The forecast of as much as 30% growth in vehicle sales next year. Elon putting that out on the call with analysts. You got to keep in mind, some analysts were out there, as you said, Romaine, low expectations going into this quarter. So anything that was good news, even slightly good, and then if it's even stronger, there were a lot of excitement over what it got. The stock.
Hey, this is going to be fun, Carol Massar. Pop quiz. Remember when I used to do these on you all the time?
No.
You said Tesla was the #1 gainer in the Nasdaq 100. Do you know the #1 gainer in the Nasdaq Composite today?
It's not Tesla, is it?
No, it's not.
I don't know.
It's a micro-cap company.
Is it a pharmaceutical company?
Yes, it's a pharmaceutical company.
I could cheat, but I'm not
always go there with the biggest movers in the
biggest movers. Up 600%, Carol Massar.
Who
you
is
failed
it?
today's pop quiz. Monopar. You know them.
How did I miss that one? Now I feel like my gainers are not as exciting.
All right, what do you got next?
Hey, I just want to say, though, Tesla is...
Welcome back, Carol.
I know, exactly. Tesla is still off 40% from its high back in November 2021, so a little perspective. UPS, another one, up more than 5%.
This was surprising to me, right?
Yeah. Well, and it was up 10% at its highs, finishing the day with about a gain of about half of as much, 5% higher. It returned to sales and profit growth for the first time in nearly 2 years, driven by higher volumes, more profitable packages, and steadying labor costs. Yeah, I mean, they really seem to deliver. What?
But then we had Jonathan Chappell, analyst over at Evercore, on earlier today. He was kind of poo-pooing it a little bit. I mean, he kind of gave Carol Tomei a pat on the back, but was kind of like, look, this is one quarter, and they got some other issues that go well beyond what just happened in 3Q.
Let's not forget, back in January, they were planning to save $1 billion in costs, and they're cutting, some 12,000 management jobs. So there's been a lot going on at that company. And then we got some earnings, a place I think that you like to eat.
Texas Roadhouse. I don't know if I'm allowed to say this, but I used to go there actually a lot. I have one like right across the street from our office. I used to go all the time. Unfortunately, they're not doing that well, at least not in the most recent quarter. EPS looks like a miss in the most recent quarter. $1.26 on an adjusted basis. Street was looking for $1.33. Revenue coming in line with estimates at about $1.3 billion. They're just going to round that up. But the company also saying that it sees commodity cost inflation below 1%, and that's a revision lower. Previously had seen 2% here, so a potential benefit, if you will, long term with regards to its own commodity costs. So the shares you can see down about 6%.
Yeah, taking a look at the press release right now, the company said that they, compared to the prior year, results for the 13-week comp restaurant sales increased 8.5%. At company restaurants, increased 7.2%. At franchise restaurant, average weekly sales were $149,000, of which $19,000 were go-to sales.
But it's in the full service restaurant space, which a lot of people are down. They're leaving that behind and going to the quick service restaurant, or they're moving up from fast food to quick service restaurant. So it's kind of like they're not in that sweet spot just quite yet. Let me just jump in here with Dexcom results. Third quarter revenue meeting analyst estimates $994.2 million. Analysts were looking for just a little bit below that. But you have a big drop in the after hours trading here of almost 12%. In terms of the full year revenue, Romaine, $4 billion to $4.05 billion, pretty much in line with what analysts were looking for. They were anticipating $4.01 billion.
Well, it's interesting, too, and it's interesting to see the share reaction. And we're also keeping an eye on Edward Life Sciences. We were just talking with Sarah Malik over at Nuveen, who's actually had this on her radar. She's relatively positive on it, but it'll be interesting to see whether that competing medical device company actually has the same reaction as we're seeing right now in Dexcom.
15% to the downside.
Yeah, I mean, listen, this is one that's already down 40% so far this year, so getting hammered a little bit more, certainly in the aftermarket. All right, guys, let's get to another one that is crossing in the aftermarket. We're talking about Capital One Financial. Let me walk you through the numbers. All right, third quarter net interest margin, 7.11%. That's above the estimate of 6.91%. Net revenue, $10 billion, also a beat. The estimate on the street was $9.87 billion. Third quarter total deposits, that too is coming in higher than forecast by the analyst community, $353.63 billion. The estimate on the street, $345.43 billion. Third quarter adjusted EPS, $4.51. Quite a beat. So 451 versus an estimate of 377. What do you got?
Tapestry.
Yeah.
We're now getting this crossing the Bloomberg terminal that Tapestry deal with Capri has now been blocked by a judge. The FTC, of course, had challenged this merger. We are now learning. We don't have a lot of details other than that right now, guys. But that Tapestry deal that, of course, a lot of folks thought would not make it through the regulatory process, Scarlett, has been blocked by a judge in a win for the FTC.
And I'm just going to point out, Tapestry shares are up about 6% here in the aftermarket. So investors reacting pretty quickly.
And this is a rare win for the FTC as well, because they've blocked a lot of these M&A deals, or at least, kind of stood in the way of them. But once they got to court, it didn't actually necessarily pan out. Again, the Tapestry deal with Capri is blocked, and this was part of their effort to create a U.S. luxury giant to better compete against Kering and LVMH.
And I am curious, though, to see how, and holy cow, can we put up Capri shares, by the way, very quickly here? They're actually down 51% here, if my numbers are correct on the screen. Someone please double check me here. But right now, trading below $20 per share here in the after hours trade.
Right.
And I think that really says it all. To get to your point, Carol, the idea that you saw Tapestry shares move higher and that you're seeing this big drop off in Capri, I think you really understand where investors' heads were at as to who this merger was much more important for, Capri or Tapestry.
That's remarkable. Shares down 52% as a result of this ruling. That's pretty remarkable to see.
Right.
Go ahead, Carol.
But it speaks to, right, like what we've seen, that in some ways building these, I don't want to say conglomerates, but pulling in more brands to certainly a company can be beneficial. And certainly Tapestry saw it that way, and certainly investors necessarily saw it that way.
And I am curious, and I'm just going to play devil's advocate for a second, because we kind of saw this with the whole JetBlue and Spirit Airlines deal. You have companies that are clearly going through issues, and maybe M&A is the solution to those issues. But when you have a regulatory environment that basically says we can't allow this, then what is the future of a Capri? What is the future of a Spirit Airlines if they don't have that optionality for M&A and other strategic options?
And the other thing I would say is throw in globalization, or when there is global competition, that sometimes you need to have bigger players. I'm not saying that, you need to think about the impact on consumers and competition, but you do wonder about that going forward.
Does this make them more ripe targets for activist investors or private equity?
Good point.
But I also wonder about the consumer protection here. Like, what's the argument for not allowing a deal like this? I'm interested to hear that. Like, who are they protecting? What are they protecting?
Well, I'll say Lena Khan is more than welcome to come on the show and explain that.
Yeah, I think that'd probably be pretty interesting. Capri shares sinking by 54% after Tapestry deal blocked by judge.
Speaking of fashion.
Yeah, we're getting more
Thanks
and
for
more.
moving him along.
Okay, let's look at Skechers. Skechers shares are higher by close to 10% in the after hours right now. The company announced third quarter results, record-breaking quarterly sales. Taking a look at the company results, third quarter earnings per share coming in above estimates at $1.26 per share, beating estimates of 93 cents. The company also said it sees fiscal year sales at $8.93 billion to $8.98 billion.
Yeah.
So narrowing its forecast to the higher side because it's 8.88 to 8.9.
All right, so Skechers doing well, up 10%. Deckers, which of course makes Uggs, also doing well, up at 7% in the after hours trade. I'm just going to get right to the forecast, but the company is saying for the full year, EPS will come in at $5.15 to $5.25 per share. And I'm going to wait to give you a comparison on that. I think we have some wrong numbers here. But 2Q net sales also coming in above estimates here. You see the reaction in the shares positive to the upside.
I'm thinking Tim's an Uggs guy, and maybe Romaine, you're a Skechers guy.
Hoka's.
No?
Yeah, Hoka's. I know Tim.
You guys like
Tim's
those
probably got 'em on.
big sneakers?
Why not?
No,
I've
Tim
never seen it.
You only
Romaine
live
sneakers.
once.
No, I don't
It's
know.
like they were like
Life
a
is-
foam weapon.
know?
They're
Yeah.
so big.
It's Gucci loafers all the
comfy.
way.
Oh,
Yeah.
Gucci. That
I mean, it's a
that
little hard
checks.
on the treadmill, but, I tough it out.
Oh, that
Sacrifice
checks
for
out.
fashion.
All right, guys, lots of stocks moving in the aftermarket. We got to run. That's our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you again, same time, same place tomorrow.